traders, Todd here. Welcome to the free video update. It's now, Tuesday, June 25th, 2019. And this will be for Wednesday, the 26th. Before we jump in, just know that every Wednesday we have the Wednesday webinar. That'll be 8:45 on YouTube. There should be a link directly below this. And if you're watching on YouTube, there should be like an eye that pops up on the screen that will link you over to that. Be sure to set that reminder right here. So 8:45, and when we go live, you'll get a pop-up reminder. So it'll be fun. We have live interactive. My team and I will be there. We go back and forth, show you a couple things and a couple live positions, and have some fun, interact. So check it out. Okay, to business. So we are still bearish the dollar, and I think that has a lot of kind of implications and impacts throughout the markets from a macro point of view. But the predominant count that we're looking at continues to be a five-wave move down in the dollar. And if the dollar is going to be weak, commodities should continue to be bid. We still have our gold trade. If you've been following along in that, we have been trading the break from the from this like 2000, this 3-year top, really, from 2016 into 18, and then we just finally broke above. So inside of there, we've been trading that breakout from an Elliott wave point of view. We have a little bit more to go here before we finally find some resistance. So we're managing this 125, 132 call debit spread, which was adjusted to move up, to get more upward reach, more positive delta on that trade. So that trade's going pretty well for us, but we will be managing with the members. So dollar down, gold up. One thing I'm starting to see there, which is interesting, is those emerging markets are starting to respond fairly well from that weaker dollar. So we're seeing sort of a higher low here in GLD, in EEM. And we've got a push up from the lows. We went down, we double bottomed in late 2018, we moved up, we just made another higher low. Wondering if we could get a little bit of a bounce there in emerging markets. And obviously a big part of emerging markets is Asia. And a couple Chinese markets I want to look at. The Shanghai Composite actually showing some signs of life here. There is possibly a big old nasty triangle that is some kind of high degree fourth wave. Shanghai Composite started trading again in the 90s. So we could have a big run up sideways, and then we move up in wave 5. But in the near term, wondering if we have that to go. So I'm not all that bearish yet. But if we start to break through some lower lows, then yeah, we're in trouble here. But that weaker dollar does help emerging markets, and obviously China's not an emerging market, but that weaker dollar generally boosts global equities. Okay. So that's that. That's mainland China. Here's Hong Kong, which has a very similar but actually a little stronger look to it. A similar triangle trying to break out through the highs here. So all in all, pretty bullish. If you get a topside break, that'd be pretty amazing. So we'll see. Those are long-term charts in China. Bonds are moving up as yields are moving down. We've been tracking this 30-year bond count for a while. Looking for upward fib resistance. Bonds up, yields down. Yields down is bad for banks, right? Because that hurts what they call their net interest margin, because they borrow in the short term and lend in the long term. So financials are underperforming. I came across something that was pretty interesting tonight. So I'll show you that wave count in just a second, but I wanted to show you XLF financials. And if we check the financials here on the green count, what you'll notice here is that chart by itself does not look good, right? There's XLF, the big sector SPDR, the financial sector SPDR. But what's even more interesting is you look at XLF into the KRE, which is regional banks, so large cap financials into regional. So this is the ratio, right? It's a quotient. I guess you divide one by the other. you see that the relative strength line is making a new high. So the small cap regionals are underperforming the financials. And that's certainly what you're seeing in the Russell compared to the NASDAQ and the S&P. So banks are weak because yields are low, but regional banks are even weaker. They're even weaker, right? So I wanted to show you KRE. This was a really interesting count that I came across on the red count. So if you look at what's going on here from the 2009 lows, you can see a pretty good 5-wave move, right? There's a big correction here, and this is kind of a shorthand way to just do Elliott. Look for a big correction and another big sideways correction. And there's a pretty good chance that that might be waves 2 and 4. All right, so inside of waves 2 and 4, you expect to see 3-wave moves, which we see. Inside waves 1, 3, and 5, you expect to see 5 smaller waves. Wave 1 wound up being a leading diagonal, which is a very acceptable form of a wave 1. Higher degree wave 3 broke into a nice 5-wave move, and wave 5 broke into a nice 5-wave move. Here's where things get interesting. Following every 5-wave move, you expect at least a 3-wave correction. This is interesting because you get another 5-wave move down following the larger degree 5-wave move. This 5-wave move is never going to be all of a correction. It's going to be part of a larger correction. Then we fall into a nice triangle, which is either a wave 4 or a wave B. Okay, that's the only place triangles can come in, with the exception of a couple complex scenarios. But that's likely a B wave triangle, which means that's going to give way to a C wave drop. A 61% projection of net percent distance traveled in A compared to C gives you 41.57. 100% puts you at 35.58. Further, a lot of times an ABC correction will target the area of the prior fourth. And that's down to 32.63. So that guy right there is interesting. We could have another 5-wave move down in C following a triangle break. So what I'm going to do tomorrow, guys, sorry to do it, but I'm going to hold off on the Wednesday webinar and give you my 2 favorite shorts within the regional banks to take advantage of that. And I do still hold a lot of longer-term longs in my portfolio, so I will be looking to hedge and then more aggressive. We also put a short on a home builder today. Actually, a home-related stock, which is interesting. So we'll reveal that as well tomorrow. So jump in. Wednesday webinar. See you then. Take care, guys. Have a good night.